$10 billion just flooded into SpaceX's IPO in hours, according to reports of institutional investor orders, marking one of the most aggressive capital deployment strategies the aerospace sector has witnessed in recent memory. This unprecedented level of demand reflects deep institutional conviction that SpaceX's market valuation could sustain premium multiples despite the current economic environment. Sources indicate the company is leading a race to list against both OpenAI and Anthropic, positioning SpaceX ahead of other transformative technology companies in the competitive IPO calendar. Industry analysts suggest that SpaceX's first-mover advantage in accessing public markets could establish important valuation benchmarks that rival artificial intelligence companies will inevitably be compared against. The institutional investor orders demonstrate remarkable appetite for space industry exposure among sophisticated money managers seeking long-duration growth assets. Investment committees across major pension funds, sovereign wealth funds, and hedge funds have apparently greenlit substantial allocations to participate in this offering round before public market access becomes available. SpaceX's trajectory in commercial space launch has fundamentally reshaped the aerospace competitive landscape over the past decade, disrupting traditional defense contractors and opening new economic opportunities. The company's reusable rocket technology has reduced launch costs by an order of magnitude, creating entirely new business models for satellite communications and space-based infrastructure. Reports of this level of demand suggest that lead underwriters may be managing an order book exceeding the initial capital raise target by multiples. This dynamic typically empowers underwriting syndicates to price offerings at the upper end of expected ranges or potentially upsize the total equity being offered. The race to list among SpaceX, OpenAI, and Anthropic highlights the dramatic concentration of venture capital returns flowing through a small number of companies commanding massive late-stage valuations. These three companies represent fundamentally different technological bets: commercial space infrastructure, generative artificial intelligence, and safety-focused AI development, respectively. Institutional investors appear willing to accept the market risk inherent in SpaceX's business model, which depends on continued government contracts, commercial satellite launch demand, and future Starship commercialization. The confidence implied by $10 billion in orders suggests sophisticated investors believe SpaceX's diversified revenue streams adequately compensate for execution risk. OpenAI's potential IPO has generated significant speculation about generative AI company valuations, with private market assessments suggesting the company could command a valuation exceeding $100 billion. However, OpenAI's reliance on computational infrastructure costs and uncertain path to profitability has created valuation debates among forward-thinking institutional analysts. Anthropic, founded by several OpenAI researchers, has pursued a different strategic approach emphasizing constitutional AI and safety-oriented development practices that appeal to institutional investors concerned about regulatory risk. The company's deliberate approach to scaling and focus on enterprise customers positions it differently than OpenAI's consumer-focused strategy. SpaceX's established revenue generation through Starlink subscriptions, commercial launch services, and government contracts provides earnings visibility that pure artificial intelligence companies cannot yet demonstrate at scale. This fundamental difference in business model maturity may explain why institutional capital is flooding SpaceX's offering first. The aerospace and defense sector has historically attracted institutional capital seeking stable cash flows and government contract visibility, and SpaceX represents a modernized version of this traditional investment thesis. However, SpaceX's growth trajectory and market expansion potential suggest institutional investors view it as a growth company rather than a defensive sector play. Market observers note that spikes in IPO demand often reflect broader risk appetite cycles, suggesting institutional investors are currently comfortable deploying significant capital into growth-oriented technology investments. This appetite contrasts with recent quarters when rising interest rates dampened investor enthusiasm for unprofitable growth companies. Analysts covering the space industry have upgraded revenue projections for commercial space activities as satellite broadband adoption accelerates and launch costs continue declining. These improving fundamentals support the institutional demand evident in SpaceX's IPO ordering process. The competitive dynamic between SpaceX, OpenAI, and Anthropic for IPO timing creates pressure on each company to access public markets while investor sentiment remains favorable. Market timing considerations may influence which company ultimately proceeds first, despite readiness variations. SpaceX's IPO represents a significant milestone for Elon Musk's investment portfolio, potentially unlocking enormous personal wealth while maintaining operational control through stock-structured decisions. The capital raise enables SpaceX to fund Starship development, expand manufacturing capacity, and scale Starlink deployment simultaneously. Institutional investors' appetite for $10 billion worth of SpaceX equity in hours demonstrates that megacap technology IPOs still generate exceptional market excitement when sufficient growth potential combines with revenue visibility. This contrasts with smaller technology IPOs that struggle for basic order book coverage in current market conditions. The regulatory environment surrounding space activities, satellite broadband spectrum allocation, and government contracting relationships creates important structural moats that institutional investors likely value highly. These regulatory advantages protect SpaceX from new competition and support long-term margin expansion potential. Forward-thinking analysts expect SpaceX's IPO pricing to establish valuation frameworks that influence OpenAI and Anthropic's eventual public market debuts significantly. The institutional demand evidence so far suggests space industry exposure remains a preferred allocation within technology sector allocations.